Welcome to the show. I hope you guys are doing very well. We have a lot to talk about. I hope you guys are having a great week. We're not starting off very well. I want to get into a lot. We're definitely going to get into the Bitcoin situation because there's more ETF slide. There's a lot going on with the rotation. Now, I may not bring up the IPO, the SpaceX IPO. Well, I'll just go ahead and say it because I didn't think this was going to happen, and it's happening. You got a lot of rotation going into this, getting ready for this. There's rotation coming from Tesla. There's rotation coming from the crypto market and stocks as well. Now, that's not causing the stock market crash. That's a whole nother issue. And I'm not going to say it's a crash, but it's a pretty damn good trajectory going downward when it comes to stocks. Oil seems to be kind of, regulating itself around $80, $90. We're not over $100. But with that being said, Bitcoin is getting very close to $59,000. We'll talk about what's going on there. And I want to touch on JPMorgan. I want to touch on the fact that they've basically declared war on stablecoins. And it's not just JPMorgan. Big time banking institutions are coming together and they're creating their own answer, their own solution. We're going to talk about it. I think it's pretty interesting. And by the way, the altcoin season meter is kind of in the middle. It's getting close to 50. Now, I'm not saying it's about to break out, but you're seeing a lot of rotation and you're seeing a mass exodus when it comes to Bitcoin activity out the door when it comes to ETFs, $4.4 billion. We'll get into that. We got some Clarity Act news as well. So let's go ahead and get into it, jump right into it, because we're not going to hold you too long, but we're going to try to cram a lot of information into this show here. So let's go ahead and get right into it. Bitcoin, the talk of the town. What's going on with Bitcoin now? A lot of people have their own, say when it comes to the outflow. When it comes to 100K, which those predictions were crazy. I still remember the Kathy Wood predictions. $2.5 million. You guys probably don't remember Kathy Woods and what she said. She's really quiet right now. A lot of people had their evaluations, their predictions when it comes to Bitcoin. As you can see, Bitcoin is not doing too well. Now, 2024, that was a pretty great year. The ETFs, things of that nature, we're down 12% when it comes to Bitcoin right now. And some say we're crashing down to 45. I've seen 45K predictions. I saw that today. I don't think we're going to go to 45K, but I think we're going to get really close to 50. And I think it's going to happen real quick. We have massive escalation going on in the Middle East. 15 times, I think we heard that there's going to be a deal from Donald Trump. By the way, he had a massive meltdown over the weekend. Fell asleep during the Knicks game. He's being blamed for the Knicks losing to the San Antonio Spurs. No joke. They're blaming it on Trump because he was president. But that's besides the point. I thought that was pretty hilarious. It wasn't his fault. But $61,000. Let's talk about what's going on with Bitcoin because there's a number of things. Then we'll get into the altcoins. We'll do a rundown on the price. And then we'll move into the JPMorgan, the big banks going against crypto. They don't really care about the Clarity Act. Here's the thing about the banks. And we're going to get this Clarity Act update going because there's some things that they still need to do, guys. I don't think we're going to get the Clarity Act. If we do, it'd be phenomenal. But the banks, they really don't care about the language because they are doing something that I didn't think they were going to do. And we're going to talk about it because you need to know this because it may affect our portfolios going into 2027. It may change everything, but we'll get to that when we'll get to that. Currently $61,000, roughly between 61 and 62. We're looking at Bitcoin. You can see the chart. It's not looking too healthy. We'll get into the RSI as well when it comes to the whole crypto outlook. By the way, we're $2.1 trillion and falling when it comes to global market cap. My prediction is 7 to 8 to 9 trillion in the next 5 years. So we're definitely going in the wrong direction. But as far as Bitcoin, there are 3 points I want to get to you. When it comes to this trajectory, when it comes to it going downward, there's a lot here, but these 3 really stand out to me. We're talking about the ETF outflow, $4.4 billion worth of actual outflow. We're talking about a 13-day streak, guys. This is not good. This is like a massive balloon that has been pricked and it is deflating right now. It's not good. This is the last thing we need is ETF outflow of this nature. 13-day streak. We're talking about, I think this is the biggest exodus. I'm pretty sure this is the biggest exodus of Bitcoin since 2024, since the ETFs launched. So this is very significant outflow when it comes to the ETF vehicle. And this is our floor. And I've always told you guys, this is the floor of Bitcoin. If this doesn't work out, if we see mass exodus like we saw, if this is sustainable, if this continues, you're going to see a $50,000. I don't think you're going to see, God forbid, 45K, but you're going to see 55 or 50 very quickly. And this is continuing. You're looking at a weekly outflow well over $1.7 billion. Now, let's go ahead and round it up to 2 billion. This is the biggest exodus I've seen so far. Okay. We're talking institutions. And by the way, Michael Saylor, he pulled a dirty trick on the Bitcoin investors when he did the sale of 32 BTC. Okay. Just to drop the market so he could buy that dip. He basically created his own dip. That's an old trick, by the way, because I used to do it too as well. when I was doing memes and back in the day and doing so, it's an old trick. You create fear, right? And then you just buy your own dip. This is basically what he did with the sale of BTC, and it was devious as hell. But I mean, it worked out because he got a nice dip. He bought Bitcoin. We'll get to strategies in a minute, but this institutional outflow, coupled with investors pulling back as well, pulling money out like crazy. This is real sell pressure, coupled with the ETF outflow that I don't think Bitcoin was ready for. As you can see, stocks are actually sliding too as well. I may pull that up. Massive stock sliding going on as well. And a lot of that is geopolitical based. A lot of it is rotation into this IPO that's coming up when it comes to the SpaceX scam. I'm sorry, the SpaceX IPO. There's a lot of people that are rotating their money into this, getting ready for this. And a lot of it is coming out of Bitcoin right now, along with the ETF outflow, geopolitical fear and greed, that's happening too as well. But this rotation into the IPO, the SpaceX, and I think you have another AI IPO. This is going to be AI IPO season. I think this is really bad. I really do, because a lot of this is going to explode. And I mean, financially, there's going to be an implosion of this AI situation. We already have issues with the data centers. This is well overblown. It's just one of the most magnificent bubbles I've ever seen. Okay, this is not .com. This is .com times 100. Okay, so when this thing pops, it's going to be heard across the globe. It's going to be one of the loudest popping sounds we ever heard in our recorded history, and it's going to take a lot of people down. So you're seeing this SpaceX IPO basically usurping just this huge vacuum right now, along with the ETF outflow, along with investor and institutional fear. And then you add geopolitics. Because we had 16 times of Donald Trump saying that we're going to get a deal. We're going to get a deal. They're at the table. And then everything goes the wrong way. Iran shot down an actual Apache today. The crew is fine. This was actually reported by DJT. But he basically said that we're going to have to respond to this shoot down of our helicopter. By the way, it was a stealth helicopter. Apparently, Iran is way stronger and way more powerful than we ever thought. They're shooting down Apaches. I don't know if you understand Apache technology. It's pretty hard to do. Unless they're just flying arrogantly across the area, which we don't know, but it was shot down. F-15 is being shot down. Raptors, F-35 is being shot down. So I think we're in trouble, guys. So Trump comes out and said, we're going to have to respond. So I don't know if this means another bunker buster. Because if we do get escalation once again from the U.S. side, we already know what Israel is doing. They're not really listening. But if Donald Trump pulls the trigger on another missile barrage, I think we're going to see more downward trajectory, not only in stocks, not only with oil going up, but I think Bitcoin is going to suffer as well. And you know what happens when Bitcoin suffers? Alts tend to drop double-digit percentages. You can see the actual ticker on the bottom of the screen. Lots of red, guys. Lots of red. Hyperliquid, SOL. We're going to get into that here in a little bit. We're going to do a countdown because we're seeing a lot of red altcoins right now. Bitcoin is dropping. It's going to be at 59,000 probably by the end of the day. And if we do get this escalation that Trump is promising in retaliation from the shoot down of our helicopters, what we're seeing now is just peanuts compared to where we're going. Okay. So you can see the barometer, the stock market down heavily. We'll see we'll see what it's going to do. Now, let's move to the second pillar, because when it comes to the Bitcoin price, strategy, formerly known as MicroStrategy, sold a tiny amount of Bitcoin, which basically spread fear. And then they bought that dip. It was a strategic sale. It was all tactics. Okay. Creating fear just to buy a dip. This is what it was. Very devious. Now, in late May, I want to give you a little talk about this. They offloaded 32 BTC. That was the $2.5 million we're just talking about. That was that fear pill. All right. That was the first time in many years. It was a small amount relative to their 84,000 BTC holdings. Let's go ahead and say 850,000. Okay. BTC. Let's go ahead and round that up because they bought more just recently. And they've since bought more as well. Now, this news spooked the market, but it was just to actually purchase their own dip. Very devious. So this is what we have to look for. Massive manipulation when it comes to not only strategies, but other institutions as well, because they're doing it as well. Are the other institutions going to actually follow what MicroStrategy actually did? Are they going to create their own dips in Bitcoin and buy them as well? Will they put the fear pill in the market? Because they can. These institutions can manipulate these charts at any given time because they have the money to do so. They can take massive losses. We can't. Okay. So this is the negative. This is the bad part. This is the other sharp end of the sword here. When it comes to institutional involvement, we wanted it. We begged for it. We championed strategies, movements. Everybody, you have people that wear these Michael Saylor shirts and these hats, go Saylor. We wanted this. Well, this is the other side of that blade, and it cuts deep. And what they did was completely deep. What's going on, Jay? Welcome to the show. It was devious. And a lot of people got caught up in it. So the macro, the geopolitical angle here, this is very, very potent because the ongoing conflict has pushed oil prices up and down. We have market manipulation, futures manipulation coming from the White House, essentially. Spot price is well over 100 still, but they don't talk about the spot price. And what I mean by that is the price that the actual buyers in the real world on the ground actually paying for these barrels. It's way higher than what you see in the futures market. The futures market is just a prediction. It's just a hopium, essentially. This is where they want it to go. That's not the true price of oil. So we're burning through our reserves like crazy. This is why the futures price is so suppressed. We're using strategic reserves, guys, like crazy right now. We're burning through our oil, our safe haven. And we're actually selling some of it too. And that oil can get to the market very quickly because of the infrastructure here in America. We can get that oil from the strategic reserve very, very quickly to the pump. This is why you see these future prices. This is why you see the suppression of the true spot price. Because we still have a good amount of reserves, but we're running and we're burning through these reserves so fast that is scaring a lot of the market, the smart money as well, because there's a lot of dumbass money in this market. Not only the crypto market, but the stock market is loaded with dumbass money. I'm sorry, it is what it is. But that dumb money is running out. And when the dumb money runs out, that's when the curtain is pulled back. That's when you really finally see that the emperor has no clothes. That's when the tide runs out and you really see whoever's swimming, if they're really wearing underwear or not. This is where we're going. Okay. We're running out of dumb money in these markets. Now you have this huge IPO that's coming up with SpaceX. I believe that's going to actually suck a lot of money out of different stocks and different cryptos as well, and Bitcoin as well, because a lot of people want to run to this. No one's talking about the SpaceX phenomenon, this IPO. It's going to suck a lot of funds, a lot of actual money out of the markets, both markets, because a lot of people want a piece of this. This is actually creating, I'm talking geopolitics again, the macro. It is creating a risk off environment that's very, very phenomenal right now. You have people who are speculatively buying and selling, not only Bitcoin, but tech stocks, altcoins as well. A lot of infrastructure, like Solana, Monad. You have Stellar. Great news came out. XLM is going to skyrocket next year. First quarter 2027, you're going to see the DTCCC conglomerate really take over. This is the actual inaugural quarter of this. And we're talking about this multi-strategy of blockchain usage when it comes to tokenized assets, payments. DTCC is on steroids right now. They are going to be leveraging a lot of tech. XLM was just announced. There's going to be more. We're going to get into the big banks theory too as well, because they're going to be using infrastructures like Canton. We're starting to get the actual information on which technologies and which ecosystems are going to be leveraged. I hope you're listening, because this is where you need to put your money. Not financial advice, what I'm just telling you. It's very logical. This is where you need to be targeting. This is where you need to be researching, clicking, putting these in your watch list. I'm sorry. Watch them. We're going to get into that a little bit more in a little bit, but just to kind of like complete these particular pillars when it comes to what's driving Bitcoin down. You have massive ETF outflow. We've already talked about that. Well over $4.4 billion. Biggest exodus since 2024. MicroStrategies continuing to manipulate the market. And I'm talking the Bitcoin market. Tiny sales to create their own dips, buying their dips, crushing retail. Okay. Gobbling up millions of dollars of Bitcoin. And then you have the macro effect, ongoing conflict, oil prices being manipulated, delays in expected federal rate cuts. We're not getting rate cuts. This is fear that this is inducing. This is what the macro, the geopolitical fear. It's very, very significant. This creates risk off environment, guys. And this is what you see here. And there's more. There's underlying variables as well, but I'm not going to go into those because a lot of people don't care about those, but these are the ones that stick out. And I know a lot of people, if you're going to listen to this, you're probably not even invested in Bitcoin. You're invested in, smaller caps. But Bitcoin rules the market. Bitcoin dictates altcoin inflow and outflow, and it dictates price points as well. So when Bitcoin drops 12%, this is why you see these alts really, really struggling to keep up. Now, infrastructurally, a lot of these alts are going to be okay because they're going to actually be able to detether, if you will, because they're going to be able to stand on their own legs, like Chainlink, AVAX, Polygon. I know you don't think so, but Polygon is going to be able to stand on their own feet. They're going to be okay. Canton, Monad, Solana, completely new consensus overhaul with Solana. Is going to fly like the Eagles in 2027 post Clarity Act. You have a lot of infrastructure tokens and coins that are going to be facilitating tokenized stocks, tokenized assets, RWAs. Those infrastructures are going to flourish. They're going to be able to stand on their own 2 feet. They're not going to need Bitcoin to move because they're going to be leveraged. They're going to be actually used in the real world. Like you see Chainlink being used by AWS. This is just going to snowball into 2027 post language. That's if we get the language, but I think a lot of these platforms are not going to need language like XRP. We're going to be getting into an update there because I think I have that pulled up. If I don't, I'm going to get that pulled up because we had an update by the former CTO about what's going on with the XRP and what's going on with the actual infrastructure there. Definitely going to get into that. We're going to react to that video because I think that was a pretty decent upgrade. I was happy to see that. Because XRP is probably going to go under $1 here real soon. So it's going to be very bullish for the people who are holding that particular coin. Bearish, I'm sorry, not bullish, bearish. But there's some good news infrastructurally. We'll get to that. We'll try to squeeze that in as well. Let's go ahead and get into this the actual countdown because this is short-term correction. Let's go ahead and get 12%. It's not something that's actually going to, I believe, this is not going to actually crush Bitcoin. But it's going to put Bitcoin in areas of psychological areas that are going to actually be disturbing to a lot of people. And it's going to cause altcoins to really, really go to low areas, to low trajectories. that are not predicted. And that's going to scare a lot of bottom layer investors, your retail. And a lot of these alts are going to suffer. And a lot of the devs are going to walk away because they're going to see the exodus. And it's going to be very discouraging for these devs. And they're going to walk away. And another reason is because their foundations, their ecosystems aren't conducive for growth. They just didn't build the right product. It is what it is. And that's not anything to say. You know, I'm not trying to talk them down. They didn't have the right direction. It's okay. Shit happens, as they say. So you have the primary cause. I can go on and on with this. I told you about the capital rotation. Told you about the IPOs. Those tech IPOs are going to steal a lot of money from the markets. And not only crypto, but also stocks as well. You have a ton of institutional profit taking right now. And it's fear related. It's fear-based profit taking. It's not like they actually generated money. People are losing money right now, and they're just taking what they have. All right. This is weird to me, but this is how it is right now because there's a lot of fear. We may have another war break out in the Middle East. Oil may get to $200 a barrel. So a lot of people are thinking, you know what? Why take a 50% reduction when I can at least pull some profit out? It may be 1%, but at least I can save my bag because who knows what's going to happen? You have that going on right now with a lot of people, a lot of portfolios. A lot of people are looking at their portfolios and they're comparing them to their 401k, which looks like dog shit right now. And they're like, I better take this money. The geopolitical situation can go both ways. It can be settled. We can get a deal, or we can go out full out war until everything is ruined. Infrastructurally, everything is ruined over there. This is not this is not Desert Storm, ladies and gentlemen. If everything breaks out there, you're talking about major oil infrastructures that are going to be destroyed. And it's going to take up to 5 years to rebuild this. We're talking oil production. This is unprecedented. We do not want that to happen over there. That is going to crash not only the crypto market, it's going to put the crypto bills on hold, and it's going to destroy stocks. And then you're going to have to be paying $10 a gallon for your fuel. That is going to destroy buyership. Mass exodus across the board. We don't want that. So a lot of this really depends on what's going to happen in the Middle East. It's unfortunate. It is unreal that I'm even saying this, but this is the truth. A lot of what's going on depends on how the Middle East is handled going forward. And I'm not very confident at all. Not at all. That it is out of control. There's going to have to be some extraterrestrial intervention in order for this to subside. I'm sorry, because it's just out of control. I'm sorry. It is what it is. So most analysts, and I'm going to sum Bitcoin up so we can move on. Most analysts view this as a temporary cyclical drawdown rather than a fundamental loss of faith in Bitcoin ETFs. Long-term inflows remain robust. IBT, the BlackRock situation, 1 to 3 year month flows are still strong. I don't really agree with that consensus, but this is the consensus. This is the sentiment across the board when it comes to analysts. I totally disagree from what I've just saw prior to the show. The data that I was seeing, this is bad, guys. But I understand you have to be positive. You have to be optimistic. A lot of people are buried. A lot of people are so knee deep into this, they can't move out. They can't really take the loss. So optimism is high right now. Hopium is at its all-time high right now. For a lot of people, I get it. God bless your portfolio. The outflows are mechanical. ETFs must sell BTC to meet redemptions. You have to understand that, guys. This is why MicroStrategies is doing what they're doing, because their redemption path. They had issues with that. So they had to sell Bitcoin to actually pay out. It's getting really wacky with strategies. I pray that holds, because if strategies implodes, it's not good. And a lot of people are saying this is about to happen. Major implosion within the strategies. The bottom line, the outflows are visible. The symptom of broader risk off macro geopolitical activity. This is very, very substantial. And it's causing a lot of smart profits. I like this term, smart profit taking after earlier gains. You got to do that. You can't just hold through this. This is unprecedented activity we're seeing here. I don't think it's smart to hold through this. I really don't. I think that's what a lot of people are saying. They're figuring this shit out. And they don't want to say it out loud because for years they've been telling people to hold. Hold, hold, hold. Hold the convictions. DCA up, right? These times are unprecedented. I'm sorry. You have to move differently. You have to create your strategies on the go because there's just so much uncertainty. We're not getting rate cuts at all. In fact, the rates may go up next year. So we have to think differently. We can't think traditionally when it comes to these markets. We can't go into the past trends because they absolutely do not. They're not going to predict the futures right now because everything is so weird. So we are in uncharted territory. So you have to walk differently. You have to actually function differently in these markets as well. You have to move in different ways. You have to be creative. And you can't rely on past trends. You got to throw that shit out. Don't get me started on TA. It is irrelevant at this point in time. So all of this is amplified. BTC's dropped to $61,000 essentially. But you still have the actual promise of institutional demand. It is actually vanishing at this point in time. They're moving out. So what does this leave? What happens? Okay. We don't know. That's the scary part. We don't really know. But I'll leave it at that. I'll let you ponder that because I don't want to guide you. But this is just my outlook on Bitcoin. Currently, Ethereum is sitting at, we'll run through the altcoins there, $1,600. Ethereum is going through some major issues. Not about price, infrastructurally. The actual internal structure of Ethereum itself is going through some major issues right now. A lot of core devs and researchers are leaving the flock. I don't know if they're getting pushed out or they just had enough. But this is happening with Ethereum. It's very interesting. You have this price point that's tethered to Bitcoin's movement. But I believe infrastructurally, internally, they have a lot to figure out. They're not going to go anywhere, but there's some issues with Ethereum. $1,600. BNB is under $600, which is very surprising to me, but you do have a mass exodus right now, down 10% within the last 7 days. This is very phenomenal. Very, very interesting to me. BNB was a rock solid situation for the past year. So we're finally seeing some weaknesses here. So if you're seeing some weaknesses with BNB, that should really bother a lot of you altcoin holders because it is down almost 12%. Within the last 24-hour period, it has been hit hard, just like the rest of the top 15, because there's mounds of uncertainty here. And it looks like we're about to go back to war, full-scale war. Okay. XRP $1.13. We'll get into those improvements there. We'll listen to the CTO, the former CTO. He has some pretty interesting things. He answered some questions in this particular video, and I'm going to play it because I think it's some things that I want to actually point out here. But currently, Solana is at $65 now. We're well below $80. This is a psychological barrier for a lot of Solana holders as well. I think it's a good buy point, actually, because they're rehauling the consensus. They're getting ready for this tokenization boom. They're getting ready for post-language. They're getting ready for the actual tokenized stock arena. They're getting ready for big boy shit. Real world activity. Completely overhauling consensus, the mechanism, the whole, everything, the internals, everything, validator nodes, everything is being overhauled. So I'm really taking another look at Solana myself. All right. DCing heavily. It's down across the board, a little bit up within the last hour. But me personally, I'm loving what's going on here internally with Solana. They're actually getting this ship ready, riding the ship, putting it in the right direction to where it's going to explode financially. And infrastructurally as well with activity, usership. It's not a meme ship anymore. It's an institutional giant. This is what it's turning into. I like a lot of infrastructure coins and a lot of infrastructure, but I'm really impressed about what Solana is doing. The devs are doing, how they're restructuring things and they're changing the direction, getting ready for real world activity. This is the right way. This is the right direction. This is the way. So currently down 3% within a 24-hour period. Again, these alts are adjusting to Bitcoin. They're adjusting to the trajectory of not only Bitcoin, but stocks. You know, the fear factor, institutional outflow, all of that cascades down into these alts. And if the alts don't have a strong foundation, they suffer tremendously. tremendously. So you have this in Solana. I think it's a great buy, $65. No, I found, do your research, guys. I'm not telling you what to do. I'm just speaking out loudly what I'm doing. I'm buying more Solana. It is what it is. And I'm not afraid to say that. Do your research on it if you don't understand Solana. Do your research on the actual consensus upgrade, what they're doing under the hood, making it very, very appetizing for a real world activity. They're doing the right thing. Tron is currently at 30 cents, 32 cents. I don't really talk about Tron a lot because I don't have access to it. We're basically barred here in Texas from the actual ecosystem. I would love to get access to this, but they will not allow us to. And I would really like to know why. What's so bad about this ecosystem? You know, I don't understand it, but I'm barred from it. We can't access it, but it's currently at 32 cents. I would love to get access to this, especially to the DeFi sector. There's a massive yield going on there, and that's probably why we can't access it. Hyperliquid is $58, pretty much sliding pretty profusely downward. But I wouldn't worry too much about Hyperliquid. This is going to fly with the Eagles as well. Down across the board, 8% reduction in these altcoins is crazy within a 24-hour period. This should tell you the gravity of the situation. We're talking about almost double-digit reductions within a 24-hour period. With number 9, Hyperliquid. Across the board, Solana 3%, BNB 2%. We're talking 24-hour interval. Very robust downward trajectory when it comes to these alts. So I'm going to skip over Dogecoin. It's really not relevant. I don't even understand why it's number 10 still. It's an enigma to me. We have Zcash. Zcash is trying to get back up to $500. Zcash, big issues here. 24% down within a 7-day period. You do understand what's going on with these privacy protocols. The actual Anthropic's model was unleashed to audit Zcash, and it found a major exploit, if you guys didn't know, that has recently been patched. But this Zcash exploit probably exists in a lot of the privacy protocols that we love. This was a nasty exploit. This allowed anybody that understood how to leverage it to create clone Zcash coins, replicate these coins. They still don't know how many of these coins are still out there. They don't even know if there were any minted. This is how crazy this was. I guarantee you there are some coins out there because this exploit, I think it was a 10-year exploit. I think they really didn't know it existed until now, until recently. So they released a patch. The team said, and I thought the dev team was segmented. I think they broke up recently. But I guess they, from the actual reports that I saw, the exploit has been actually remedied. And Zcash is back up and going. I mean, it never did lock up, but I'm just saying they're saying they patched it up. I don't know about that. It's very interesting. So what happens when we unleash Anthropics on other protocols? What happens when we get the AI audit standard? And AI goes across all these protocols and basically breaks them all. Because if this existed in Zcash, what's going on with the rest of these ecosystems? Are they safe? Especially with the DeFi applications, are they safe? Okay, because we're still seeing massive exploits across the board. This was just a Zcash audit. This is what I say. Unleash Anthropic's audit system on everything. Let's see where the exploits are, because apparently it can not only access and kind of like weed these exploits out, but it can actually provide solutions as well. This is the great thing about AI. It's a double-edged sword, but it can actually find things that devs can't. It can actually find issues with protocols like Zcash and amongst others that the devs don't know exist. This is the scary part about it. I think you can replicate what happened with Zcash 100 times across the board and find many other exploits. We just had a major exploit a couple of days ago. People don't talk about it, but it was the decentralized finance application that had massive backdoors. So I think we need to think about this. AI is great at this, finding problems and then presenting solutions. It's not perfect, but this was a very nasty hole in the code of Zcash, and they still don't know how many coins are out there. We don't know, but it currently is trying to push back up to $500, down 24%. I think this is probably going to be the biggest reduction next to Cardano, which was very crazy what's going on with Cardano. Stellar, 19 cents, did go up a little bit, but again, it's a victim to the actual circumstances when it comes to Bitcoin movement, ETF movement, geopolitics, all the macro. Huge news. DTCC has leveraged the actual protocol as well with other blockchains as well. But the XLM factor is huge because it's built for it. Exactly what DTCC needs. That's what Stellar's built for, and more as well. And it has just received an amazing endorsement. Great for XLM holders. I did a member video on that. If you didn't catch that, grab your membership because I did a breakdown of that as well. I'm loving that for Stellar, but all the ISO coins are going to actually receive these endorsements in going into 2027. This particular one with Stellar and the DTCC, that's going to kick in the first quarter of 2027. That's when all of that is going to take off. That is going to be amazing for not only all the ISOs, but this is just the tip of the iceberg when it comes to adoption. These are the models. And O'Leary said this once, and I may play that again for you guys. If you want to know where you put if you want to know, let me say this correctly. If you want to know where to put your money, think infrastructure. Think what the big boys, the real world, activity, what do they need, right? What do they need to exceed, to merge with crypto, to bring blockchain into the real world? What facilitator fits their needs? Because that facilitator, I guarantee you, because they're using public chains. I thought they were going to go private. They're actually using public chains. They're actually, leveraging public technology that's already built, like Canton, like AVAX. Don't sleep on AVAX. They don't talk a lot, but I gotta tell you guys, they're coming up on a lot of lists that I've saw. Monad as well, along with Solana. They're on a lot of lists. Okay. So these, because they're infrastructurally, they're ready to go. They're ISO compliant. They won't have problems with Clarity Act, with legislation. They'll be able to handle tokenized assets, RWAs, all that traffic. They may have to upgrade just a little bit like Solana's doing, but they're ready for it. They already have the foundation. There are a lot of ecosystems and foundations, and I'm talking blockchain tech, that are not ready for this movement. They are not built infrastructurally properly to facilitate what the DTCC needs, what AWS needs, what the banking system. And I'm going to tell you, the banks, I don't think it's going to go the way we want it to go. And we're going to get into that because they're basically doing their own thing. And it's on a level that I didn't see coming. And they're not going to need the Clarity Act at all. We'll get to that. But just to wrap up Stellar, a fantastic movement for Stellar. I think it's a great buy at 19 cents. Guys, do your research on the actual endorsement from the DTCC. Do your research on other blockchain infrastructures that are built like Stellar and Chainlink as well, that are going to be leveraged, because those are the ones that put your money in. Infrastructure coins that are actually going to be used. They're not just sitting dormant in the space doing absolutely nothing but taking your money. You want to put your money in something that's going to actually be used, that is appetizing for what's to come, that is crypto language friendly. That's where I'm putting my money. I'm not buying anything that's going to sit dormant, and I'm not buying anything that's redundant. And if you know, you know, okay? Canton is a great situation. It is up, actually. This is one of the bright stars here. You have some others, but Canton is one of the bright stars here. And the reason why is because a lot of the banks are in love with Canton. And I'll tell you why in a little bit when we get into what the banks are doing. That big bank war against stablecoin activity. Canton is a front runner for this, like a front running facilitator for this. It's very interesting, along with a whole lot of things as well. But this particular system here is built for the future. The foundation is conducive for amazing growth going into the next 4 to 5 years. This thing is sitting at a market cap of 6.3 bill for a reason. People know, and it's very young too. This is a very young system. It's not a 4 or 10 year situation. It's very young and it's already receiving all this adoption, all of this traction. Very interesting, up 8% across the board, 2.5% within the last 24 hours. So people are really catching this dip. When you see this type of 24-hour action upward in a system coin, right in the middle of this complete bloodbath, that should tell you something about infrastructure. That should tell you about Canton, what's really going on, and that actual adoption attention that it's receiving. These numbers are phenomenal. Cardano, I'm not even going to get into that. You guys seen what Charles Hoskinson put on X, his podcast. He's very bearish on infrastructure. Apparently he owns nothing. Apparently I don't even understand why he's, now I totally understand why he created Midnight. I get the Midnight situation now, because from what I heard from the podcast, he absolutely has been ousted. I don't know. It seems like he's been ousted. He doesn't have any say in anything. I don't know. It was very bearish podcast, very bearish statements that he made in this podcast about ADA. He's under a lot of pressure. He's being blamed for the reduction in price. I wouldn't blame any of the devs for this. This has a lot to do with macros, geopolitics, SpaceX IPO. Let's talk about it. Let's be real about that. There's going to be a lot of rotation. A lot of capital rotating into this IPO and the next one too as well. And then you couple that with geopolitics, institutional fear, pullback, Michael Saylor playing the pump and dump game with Bitcoin. It's ridiculous what's going on right now. But I think the Middle East situation, that recipe is a disaster. And I think that's going to send everything tumbling. 305 for Monero. Monero is trying to make it back to $400. I don't think Monero has an exploit. That's a very OG situation. I would love to get an AI audit on Monero as well to see what's going on there. Chainlink, $7. We are below $9, which I'm kind of shocked about that, but it's still a great buy. Chainlink will make a fantastic comeback, and it's finally going to get over, I think, $100 within the next 2 years because it has a great adoption ahead for it. That AWS endorsement was phenomenal for Chainlink. And it's just going to snowball from there. A lot of these coins it's kind of like the calm before the storm. We just need legislation. This is when you're going to see the massive inflow of institutional growth and adoption. Not before, but after. It's unfortunate, but it is true. We got to have that clarity. They got to have clarity. They got to have a legal pathway into this arena. They're not going to overstep that. A lot of the large money, the new money that's going to push the global market cap into 7 trillion. That new money is still outside of the space. They want to adopt a lot of tech too as well, but they have to have the legal pathway, clearance essentially, in order to do so. And we just don't have that yet. That's why you see these alts, these really, really top 15, the ones with infrastructurally, they're ready. They have time to get ready. They have time to perfect the situation. This is what Solana's doing before the rush of adoption and inflow. Because the last thing you want to do as an ecosystem owner, as a dev of a infrastructure, you don't want all this inflow and adoption to come towards your way and your system fails. It completely locks up. It can't facilitate. That is the worst thing that can happen to you. Very embarrassing. You're going to lose everything. So take the time now to get ready for the rush. Take the time to DCA into the good stuff. You got to do your research on that. So we'll stop at Tonecoin, $1.70 down across the board. And I guess I'll throw in Litecoin at $43. A lot of people are kind of bearish on Litecoin. It's going to be okay. H bar is 7 cents. And the Sui chain is trying to bounce back to $1. And beautiful AVAX, which is the redhead stepchild in the room, down 20%. Don't sleep on AVAX, man. Do not sleep on AVAX. So we want to get into this particular situation. Let's go ahead and move to JPMorgan, because I want to get into this, because what the banks are doing, and I say JPMorgan because they're leading this charge. Okay. They are the alpha wolf in the pack. And I want to get into what they're doing because it's very, very interesting what they are doing. And I'm going to leave this Bitcoin chart up while you guys can track this while we get into this. So JPMorgan. Now, what you have here is 4 large commercial banks, and I'm going to name them. JPMorgan Chase, Bank of America, like them or not, Citigroup, and Wells Fargo. These are huge institutions. They are actively developing a joint tokenized deposit network to directly counter the market dominance and liquidity, and this is a threat to them, of the stablecoin movement. Now, this is a direct shot at the president's crypto agenda. We have to say that as well. This is a huge threat. Now, the reason why they're coming together and they're forming this pact is because they are very afraid of what is going to happen. And we're talking capital flight. They're very afraid of this. Now, I'll put this up too, just for people who may come in, they'll understand what we're talking about here. You have to understand how very significant this is. I'll share this tab with you guys. And I'm not going to play this video. Well, I wanted to actually show this. Okay, we'll just leave it right here. So let's get into the nuances of it, because I may play a little clip of this. But these banks have basically joined forces to basically take on this movement. Now, we're not talking in-bridge type of infrastructure here. Internally, they're referring to this as the bridge. Now, this is very interesting because if you can't beat them, join them, that mentality, right? This is not what the banks are doing. They were actually moving towards that particular type of strategy, but it's not working out. And we'll get into the Clarity Act update and then I'll show you why it's not working out. So what these banks are doing is we're not going to join them, guys. What we're going to do is fight this, and we're going to actually go toe to toe. We're going to build our own infrastructure because we are already implanted. They are the challengers. We are the dominant wolves. Let's build our own infrastructure. Let's counter this. And this is exactly what has happened. Welcome to the show, Fearless. The blockchain-based platform is scheduled to launch in the first half of 2027, guys. So they're not joking around. It will be operated by Clearinghouse, real-time payments company, collectively owned by the major retail lenders. So this is an internal private permission situation. Here are the key objectives. Now, they want to prevent deposit flight. Now, this is one of the biggest arguments in the Clarity Act when it comes to the banking committee versus Coinbase, essentially, because Coinbase kind of spearheaded that movement. You have to understand that what's going on here has great implications on our future performance of our portfolios. Let's get into this first pillar. Banks fear that advancing legislation like the Clarity Act could allow stablecoin issuers to pay returns to holders. We already know this. Siphoning cash away from traditional assets, traditional interest-bearing accounts like credit unions, your traditional way of getting low yield, essentially. They don't want to lose that. We understand this. This is one of the reasons why they're doing what they're doing. They don't think what they agreed to actually within this new markup, big time losers. I don't even understand why they agreed to that, because there's so many loopholes there. Nothing's going to change. Coinbase is still going to be able to offer this standing yield. So I don't understand why they agreed to it. And I think this is why they're doing this, because they know they screwed up royally. So they conceded and they're like, okay, we're going to fight this way. We're just going to build something that's going to actually counter and fight. We'll fight with this tool. And this is what you have here, the bridge. So preventing that deposit flight, preventing you from moving your account from brick and mortar to DeFi, to Coinbase, essentially, or KuCoin. This is what they're trying to stop because they can't compete. They're going to lose a lot of money. They generate a lot of fees on us in the real world. That's how they make their money, on loaning money, providing these vehicles for you for investing. Service fees. This is how they make money. They're going to lose billions of dollars under this current markup. So why not build something that mirrors what DeFi does, mirrors what we see in a decentralized finance application activity? This is what they're doing, man. Now, retaining liquidity is another reason why they're doing this. By converting FDIC-insured customers' deposits into digital tokens on our private permission blockchain tech, banks can keep funds within the regulated banking system while offering crypto-like capabilities. So it's going to be a hybrid system they're going to launch next year. And the FDIC is going to ensure every bit of it. And this is what crypto cannot get from the government. That's something that DeFi will never be able to secure. FDIC insurance. This is the biggest part of why a lot of people do not want to jack around with DeFi, real world activity. Okay. Because of that risk of losing it all and not being insured. Well, you're going to be able to retain this type of insurance if you're going to stick with the big banks, because they're offering you crypto-like capabilities. This is a hybrid system that they're building. Okay. This is different. I didn't see this coming, but when you're on the losing end of this, when you're potentially going to be able to lose billions of dollars, you have to react to that. You have to think critically. And this is what these banks are doing. And they have come up with and I think this is the actual private permission chain that JPMorgan has been building for years. I think this is what they're using. It's not a public system like I thought it was going to be. So we're talking about preventing deposit flight. This is the main core issue of the Clarity Act argument. And then retaining that liquidity, providing their institutional and retail holders not only traditional banking, activity, but crypto-like capabilities as well. So we're talking about a digital token that these banks are going to start offering. A hybrid situation to where if you want to traditionally, deal with the institutions, you can. Nothing's going to go away for the seniors. You're going to be okay. But if you're a newbie, if you want to actually partake in cryptocurrency-like capabilities, cryptocurrency, type, activities, you'll be able to do so, and you will still be able to be insured. This is what the banks are about to offer Q1 2027, and I think this is going to be a major hit on our portfolios, because a lot of that inflow that we were looking for, I don't think it's going to even make it. And if we don't get crypto language, this is going to be a big win for the banks, because we're going to actually be able to go into our brick and mortar and actually have crypto-like capabilities alongside with FDIC insured, technology as well. And we'll be able to have digitized tokens. I don't know if these banks are going to have their own CBDCs, because they're not going to be stablecoins. They do not like the stablecoin activity. And I'll show you why. They have this comparison here as well. So it has to be a CBDC they're talking about. Number 3, maintaining traditional risk and profiles. Now, this is another reason why these big banks are actually creating the bridge, the actual counter to stablecoin activity. Maintaining traditional risk profiles. Now, unlike private stablecoins, digital tokens represent standard claims on commercial bank deposits. It's like a little synthetic version of your deposit on a digitized blockchain ledger, preserving the bank's existing credit risk profile and regulatory framework. So again, a hybrid situation is what they created. It's going to walk like crypto, but it's actually going to be a shell around traditional banking activity. This is very interesting. Real-time settlement. So you're gonna still maintain that for your institutions. You're going to have that real-time settlement. The infrastructure will connect legacy payment rails with blockchain technology to enable instant 24/7 cross-border transactions and settlements. This is another aspect of the bridge that's coming Q1 2027. This is a clear actual rebuttal to stablecoin activity, to the Clarity Act, to the Genius Act. This is their solution. This is their retort. This is the rebuttal. The clearinghouse expects corporate clients to use the network for programmable treasury tools. Scream CBDC to me. Automated liquidity management and minimize intermediary friction. So this is what we're talking about. This is what JPMorgan, Bank of America, Citigroup, and Wells Fargo, this is what they've cooked up in response to the Clarity Act. A joint tokenized deposit network to directly counter the market dominance and liquidity threat of stablecoins, guys. So we have this massive stablecoin movement, massive volume here. These banks are like, you know what? Not so fast. Actually, we've built a competitor. Actually, this is what we've been doing this whole time. So that whole argument, the whole Clarity Act kerfuffle, I think that was a smokescreen. Because look at what we have here. The bridge, the blockchain-based platform that these banks have cooked up that is going to actually launch in Q1 2027. And it's a beast. It is a freaking beast. It walks like traditional banking, but it has a crypto shell. This is very interesting. And it does not need the Clarity Act because it's going to be running on existing laws. And it's FDIC insured. So here's the features. Here's the differences when it comes to stablecoins versus tokenized deposits, tokenized deposit networks. Now, as far as the issuer, it's going to be a regulated commercial bank, JPMorgan. We already named them. And I think there's going to be more that's going to actually be implanted into this umbrella. Currently, it's JPMorgan, Bank of America, Citigroup, and Wells Fargo. It's probably going to grow. But these are regulated commercial banks. They're already regulated. They don't need regulation. They're already regulated. When it comes to stablecoins, they're all private crypto firms, guys. They're all private. When it comes to the backing, stablecoins have T-bills, cash, liquid reserves, treasuries, as of the new Genius Act. This is what it is. With tokenized deposit networks, this new situation that's going to happen next year, standard FDIC insured bank deposit, everything is going to be insured. So there's no issues you have with reserves. You understand what happens with stablecoins. Sometimes they depeg. There can be some, you remember the FTX situation. You don't have to worry about that with brick and mortar. System profile, stablecoins versus this new deposit network. The deposit network is going to be integrated, and it essentially integrates existing real-time rails. So there's actually going to be a merging of that private permission blockchain. So it's going to be even quicker, more secure, more faster. But it's still traditional. It's just a nice little blockchain upgrade. But the actual rails, they're going to still exist, along with the FDIC insurance and regulated commercial, activity. When it comes to stablecoins, it's all external. There's no traditional anything with the new stablecoin activity, with this stablecoin framework. It's quite new. And for those of you that are in crypto, you understand, quite new. Now, as far as the stablecoins, when it comes to DeFi, this is what you see with stablecoin activity right now. We generate yield. They're loaded in decentralized finance protocols. Matter of fact, we'll look at TVL here in a little bit before we move to the Clarity Act update. Crypto trading, retail payments, this is what you see. That's quite new when it comes to stablecoins. That is very, very new when it comes to stablecoins. When it comes to retail payments, that is skyrocketed. That's why you see the volume skyrocketing, because of the retail payment rail that has been actually opened up due to the Genius Act. Now, when it comes to the tokenized deposit networks, it's going to be bank-to-bank transfers, corporate treasuries, large-scale settlements, and a slight retail trickle. That's if they choose to go into the crypto-like capabilities that are going to exist in brick and mortar starting first quarter. So I don't even know how this is going to affect fintech. It's very interesting. I need to look into that. But this is going to shake up the game. What JPMorgan has done, Bank of America, Citigroup, Wells Fargo, this retort to the Clarity Act because they lost when it comes to land. They compromised and that was a fail. This is the actual counter. As of June 2026, participating financial institutions have yet to select underlying blockchain vendors to build out the system. I actually found out who's going to build it, and I'm going to share that with you. And actually, part of the infrastructure is going to be used as well. It's Canton. Canton is the front runner, which is very interesting to me. AVAX has been mentioned as well. So this is really interesting. I want to bring this to you because I think you need to really put this on your watch list. Definitely put Canton on your watch list because it has been coming up a lot. In these particular institutions, they love Canton. JPMorgan, Bank of America, Citigroup, Wells Fargo, they understand Canton. But not only that, any type of infrastructure, any type of builders or devs that understand these type of activities, they're going to really, really flourish going into the next 5 years. Because this tokenized deposit network is real. It's going to actually counter stablecoin activity, and it's going to go to, it's a direct enemy of the Genius Act. And I think this is a shot to Donald as well. So I'm be interested to know what you guys think about this. The big JPMorgan Chase movement. They are coming hard for stablecoins. They lost the battle with the Clarity Act, so they're going to build their own bridge. And this is what it is. They literally refer to this movement as the bridge. Blockchain-based platform. Be looking out for this. So don't forget about this. Currently, Bitcoin is $61,000 still. We're still consolidating. I don't know how long this is going to hold, but we're going to get into the Clarity Act update because this is very interesting what we have here with the Clarity Act. And I think I'm not very bullish about this. Now, what we have is a stalemate. Clarity Act heats up, but prediction markets are buying the August deadline. They're not buying the August. Listen, the August deadline is BS. And we'll get to it because there's so much left to do, and they're dragging their feet. And what JPMorgan and Bank of America, these banks, what they're doing with their tokenized asset platform that they're going to be launching next year, Q1, that is a problem for stablecoin activity. And I will tell you why, because of the FDIC involvement. This has been a big argument. Why can't we get that type of insurance in DeFi? Why? Well, it's because they're scared. Look at all the exploits that just happened. Look at what happened with Zcash. Tons of exploits within the last 2 weeks. Who would want to insure that? If I'm the FDIC, I'm not touching DeFi because there are too many ways for people to get their money stolen. We got to fix that. We got to fix DeFi before we can even get that level of insurance. I don't think we'll ever get it. This is why this is a great opportunity for the banks to use those exploits as an opportunity to actually, tell the world, hey, we'll give you crypto-like capabilities in our traditional rails, on our traditional platform. We'll give you blockchain tech. We got it all. We got your traditional banking and we got your actual move upward when it comes to crypto, blockchain tech. That yield that you're looking for, the crypto-like capabilities you're looking for, we will give you that. Come back. There's going to be a huge fight ahead. So we need the crypto language. We need this Clarity Act in order to fight with these banks because they got the one leg up on us big time. Because what I've just told you guys about what these banks are doing and what they're about to launch next year, it's going to hit hard. It's going to hit hard. And I got to tell you, the institutions are going to love it because they get the insurance and they get crypto-like capabilities. They get a fast payment rail too as well. With blockchain, they're going to be implementing these blockchains. Crypto is evolving. Blockchain tech is evolving. It's growing up. We're not early anymore. It is there's not an apex. We have an apex yet, but we're not early anymore. So now you got to move differently. So let's get to the Clarity Act. Crypto clarity pushes heat up, but the prediction markets aren't buying the August deadline. Let's go and get into this. Crypto groups and Senate allies are ramping up pressure for Clarity Act vote, while prediction markets are growing less convinced. The bill can become law before August. Now it's not going to become law. Let's go ahead and get it. So if you're into prediction markets, this is an easy prediction market move for me. I'm voting no. It's very simple. It's probably the easiest money you can make. So let's get into this article a little bit. A coalition of more than 200 companies and organizations sent a letter date. This is going to be June the 7th here to the Senate Majority Leader, John Thune. He's been getting a lot of letters about this. And Senate Minority Leader, Charles Schumer, Chucky. urging them to bring the Clarity Act to the full Senate floor for a vote without delay. It ain't going to happen. Signed into law, or they want it to be signed into law before July the 4th. I believe that's the actual deadline that Donald Trump wants. A lot of people are saying we're going to run out of oil on Independence Day. That would be crazy. That would be the biggest bummer ever if we ran out of oil on Independence Day. But I digress from that. It's a running joke here. So signed by Stand with Crypto. Now, the Blockchain Association, this is going to be Stand with Crypto. Signed by Stand with Crypto or whatever. This particular email that the majority and minority leader got. This came from a Blockchain Association, which was kind of different. The Crypto Council for Innovation and the Digital Chamber. The letters frame the bill as a competitiveness imperative notion, arguing that without the federal framework, digital assets, and I really agree with this, all the digital asset activity will continue moving offshore jurisdictions with weaker consumer protection and less transparency. It's already like that. But they're right. It's going to be an exodus. The push comes roughly 3 weeks after the actual Senate committee. We're talking about the Senate, guys. The House has already passed it now. It's got to go back to the House once they get through with this. But I don't think there's a problem there. It's got to get back to it. Now, they're urging the advancement of the Clarity Act by May the 14th. Now, this is obviously this didn't happen. Okay. Now, we did get the advancement, but the actual movement back to the House and to the president's office, it's not going to happen on July the 4th. I'm sorry. That is not going to happen. There's too much to be done here. Now, per Davis Wright, the Senate Banking Committee substitute text still needs to be reconciled. And a lot of that was the banks versus crypto committee. And then there was some ethics, basically the Trump law. You have issues with that as well. But this reconciliation, it needs to happen in the Senate Agriculture Committee's Digital Commodities Intermediaries Act. All of that needs to happen before the Senate consideration. And any version of the Senate pass, or if it does pass through the Senate, it would then need to be reconciled in the House before it gets to President Trump's desk. So this has to go back to the House. So we don't know if the House is going to see something that they don't like. It hasn't even got to the House yet. There's so many roadblocks here. And then you have the Blockchain Association. It's like, get it done. You're killing us. You're killing the ETFs too, because you have the altcoin ETF baskets that are waiting to be launched. We have some that have trickled in, but they're still waiting. Now, this is what we need to, this is the road ahead. Okay, this is what we're talking about here. Now, we got the House passage. That was in July 2025. Senate Bank advancement. That was May the 14th. Finally, 15-9 bipartisan vote. Coalition letter, June the 7th. 200 plus organizations urged for floor vote. We got that. So here's the remaining activities. We need a merged Senate text, banking plus our agriculture package, unresolved. That needs to be resolved. We need to have a schedule for Senate floor vote. That's after number 4, right? No public timeline from leadership set yet at all. Then you have to hold the vote. So we need that unresolved situation when it comes to banking and agriculture. Those packages have to be actually solidified. And then we need the timeline set for the actual freaking vote. And then reconciliation. We need it to be reconciled and signed in the House. And then it goes to President Trump's office. We are so far from there right now because they're still dealing with these actual banking and agriculture issues. DeFi language, ethics. All of that is still pending before we even get the timeline. All that set, the schedule set for the actual vote of all this. So I don't think it's happening. I really don't. Now, Senator Cynthia Lummis, she's been so boisterous about this, not only Bitcoin Strategic Reserve, but also this crypto language as well. She's been championing this. She's been a great steward. One of the bill's most vocal champions, Ms. Lummis, posted on June 7th that the Clarity Act passed committee and that the actual floor is next. So she's saying that it passed to the committee. I have seen nothing about this, only her words. Okay. Adding that the supporters did not travel this far to quit on the 5-yard line. So I hope she's right. Senate Banking Chair Tim Scott followed on June 8th saying, and they've done this before and we have seen absolutely nothing. So maybe this is much to do, a bunch of cheerleading just like before. Tim Scott is saying clarity takes the side of everyday Americans and would bring digital assets into a safer, fairer, and more transparent system. That's just a bunch of BS. Come on, Tim, we need more. We've heard that before from Tim. He's got to start writing his own shit. As chair of the committee who panels drove the bipartisan vote, the advancement 15-9 vote that moved the bill to the stage, Scott's involvement goes beyond standing floor advocacy. Yeah, whatever. This is a fluff piece. So in a nutshell, there is a lot left. Now, Cynthia Loomis, she's saying that, the committee, we're getting to the scheduling and then we're getting to the actual vote. We'll see. There's a lot to be done, guys, a lot to be done. We really need this language. 200 companies are like, get it done already. We have Blockchain Association, Crypto Council of Innovation, Digital Chamber, they're saying, get it done already. Donald Trump is screaming, get it done already. DeFi is screaming, get it done already. We all want this. So again, guys, July the 4th is the hard date that Trump said. I guess he wants to use this to kick off, the Independence Day. Hopefully we don't run out of oil. It's going to be a very weird 4th of July when gas is $10 a gallon. We're not going to have money for bottle rockets and sparklers and shit. We're going to be making our own homemade dynamite. I don't know. It's going to get really weird. So with that being said, I wanted to squeeze in the XRP situation. I thought this was a good report by the ex-CTO. Let me see if I can get that in. I may still get that for you guys. Now, this is about a 1-minute situation. Now, how XRP's utility is expanding. This is with Mr. David Schwartz. I wanted to bring this in just because a lot of people are like, "What? Ripple's doing great. Why? What's going on with XRP?" Now, this is about XRP's utility. I wanted to squeeze this in before we get out of here because this is, I think, very extremely relevant. This is the former CTO. Let's have a listen to Mr. Schwartz because this is about the actual incoming utility boost for you XRP. I think this is amazing. This is what a lot of people have been waiting on. XRP movement, XRP adoption, XRP utility. This is coming from the man. Okay. Let's have a listen to him.
I am excited to answer this question. My name is David Schwartz. This is XRP in a minute. How is XRP's utility expanding? Bitcoin got things started by providing a public blockchain that allowed people to hold and transfer Bitcoin. The XRP ledger followed soon after, providing both a native digital asset similar to Bitcoin, as well as issued assets that could represent things like stablecoins or tokenized assets of any kind. Today, enterprises are using the XRP ledger to provide tokenized real-world assets. And in the near future, they'll be offering everything from tokenized securities to money market funds, even things like tokenized stocks. And coming soon, we'll see features like tokenized repos and tokenized loans. Enterprises will provide the features that will attract mass retail adoption, where DeFi can truly deliver on its promise of replacing TradFi and providing the financial services that everyone needs.
All right. I hope that wasn't AI. I mean, was it just me? It looked like they had a gun to his head. He's reading a script. I don't know. I'm just playing. No, all jokes aside, I hold a lot of XRP. So, I'm hoping what was said was true. But it just looked like he was under pressure to say that. The eyes didn't look right to me. Hopefully it wasn't AI. But yeah, that, I want to play that. What do you guys think about that? It is what it is. XRP really does need to move. It needs to be used. It's kind of dormant right now, but it needs to be used. It needs to move. It needs movement, guys. And I think what was said here, hopefully comes to fruition. There was some Bitcoin language there as well. Oh, you know what? I want to play this again. It looks like he was in distress there. I want to play this again. Let's give it a good low.
I am excited to answer this question. My name is David Schwartz. This is XRP in a minute. How is XRP's utility expanding? Bitcoin got things started by providing a public blockchain that allowed people to hold and transfer Bitcoin. The XRP ledger followed soon after, providing both a native digital asset similar to Bitcoin, as well as issued assets that could represent things like stablecoins or tokenized assets of any kind. Today, enterprises are using the XRP ledger to provide tokenized real-world assets. And in the near future, they'll be offering everything from tokenized securities to money market funds, even things like tokenized stocks. And coming soon, we'll see features like tokenized repos and tokenized loans.
Tokenized
Enterprises
repos
will provide the features that will attract mass retail adoption, where DeFi can truly deliver on its promise of replacing TradFi and providing the financial services that everyone needs.
All right, so I don't think it's going to replace TradFi, but you know what? That was cool. Now, you know, the ledger, I think before he moved out, he talked about the upgrades to the ledger and all this stuff. That's all great news. All great news. All great news. So, you know, I just want to play that. Very, very cool news. As we close, let's go ahead and get to Bitcoin. 61,000. It's kind of roughly just kind of holding this line here at $61,000. Really close to 59,000. Bitcoin lost. I think I don't even want to go there because it's just, I was already super bearish about it. So we'll just leave it at that. We talked about Stellar. Yeah, I think that's it. I don't see any really popping news here that's really popping here that I could report. Stock market is just completely getting crushed. I will tell you that. We talked about this geopolitical angle too as well. And you know, this tweet from Trump, I didn't like it because I feel like we're about to go back to full scale war. We're about to drop some bunker busters again. We don't need to do that. We don't need to do that. And, you know, in fact, I'm gonna pull this up because this kind of correlates. If this goes bonkers again, we're gonna see even massive tailspins. And Bitcoin is already weakened. It's already wounded at this point in time. We definitely don't need war to break out because you see the 61,000 on the screen. You're gonna see 50,000 if war breaks out tonight, overnight. This is what Trump is saying. Now, this is a post from Solomon Ahmed. He follows this. He follows this a lot. Breaking: Trump confirms Iran shot down Apache helicopter last night and says the U.S. must respond. This is going to affect Bitcoin heavily. Stocks. You can already see the stocks going crazy right now. This is today. This was posted earlier today, 5:38 p.m. I have just received and have been informed by our great military that last night the Iranians shot down one of our highly sophisticated Apache helicopters. And if you don't understand the Apache helicopter's tech, that it's very hard to detect those helicopters. So I don't know if it was pilot error. I don't know if what was going on with the Apache pilots, if they were smoking weed or something. I don't know how they got into the way of a missile in this particular helicopter, but there has to be some mistakes there. Either that or Iran is they're on another level. They're more sophisticated. They're better than we thought, than our military thought. The reconnaissance, all the intel was not great because they shot down an Apache. Now, this Apache apparently was patrolling the Straits of Hormuz. There were 2 pilots involved. Both are safe. They were uninjured. Nevertheless, the United States, here's the part about it that's not good for markets. Nevertheless, the United States must, of necessity, respond to the attack. Thank you for your attention to this matter. It's like he's talking to a boardroom. So what does this do? What are we going to do? I mean, what are they going to do? Are we going to bunker buster time? More tomahawks? Land invasion? We know we're not going to do that. We can't do that. Because if we start back bombing Iran, Israel is going to start as well. And then that is when infrastructure is going to be damaged. Again, more infrastructure is going to be damaged. So we don't know how Iran has read up their situation. So again, back to Bitcoin. This can send Bitcoin way past 50 if this occurs. And it looks like this is about to happen because apparently we're going to respond. Our military is about to respond to the attack on the helicopter. I don't know. It's never been a ceasefire As far as I'm concerned, I think that was all bullshit. There's never been a deal. In fact, I don't even think Iran's want to talk. They're not talking to us at all. So who knows what's about to happen? But I will tell you, if bombs start falling again, you're going to see Bitcoin fall to $50,000. And that is another psychological barrier that's going to create a wave of fear that's going to induce more ETF outflow, more institutional outflow, more retail, which retail is very thin already, but that retail is going to, implode as well. And then that's going to actually equal and cascade down to the altcoins, and you're going to see double-digit percentages downward with altcoins as well. So you may see right now what we're looking at, Ethereum down 12%. I'm going to go at just a 24-hour interval. Ethereum down 2%, BNB down almost 3%, XRP, which was some pretty decent news coming from the CTO, former CTO, down almost 4%. Solana down almost 4% within a 24-hour period, guys. Hyperliquid down almost 8%. Dogecoin 3%. Who cares? 2% with Zcash, 3% with Stellar, which is a great buy. I told you guys about that earlier. These alts they're imploding. These are 24-hour intervals of downward trajectory. These are some reputable altcoins and reputable infrastructure. Doesn't matter. Bitcoin runs this market, and it is getting mortally wounded right now, big time. So more ETF outflow, be looking out for that. More meddling when it comes to strategies. You may see a little tiny sell again, and then, Michael says he's going to buy his own freaking dip. It's crazy movement, what we have right now. Some of the top news, you have risk off macro situations. The prediction is $59,000. Massive liquidations, redemptions have to be met. ETF outflow is crazy right now. So the consensus is 59,000 by the weekend. I think 50 if bombs start falling. I think 50. If the U.S. starts bombing around, I think 50, here we come. Altcoins, double-digit reductions. That's when I'm going to buy. My conviction plays my infrastructure coins. That's how honestly, I can't wait. I can't wait for more blood. But that's just me. That's how I trade. That's how I buy. But of course, I'm buying the right stuff. Zcash finalized Ironwood Orchid fix. That was that exploit that Anthropics found. They got the patch in. Hopefully it works. FDIC draft denies insurance for stablecoin holders. We talked about what JPMorgan, Bank of America, Chase, what they're doing with their infrastructure. They're about to launch next year. The FDIC will never touch stablecoins. They will never touch DeFi. I think we need to stop that. So clearly, that's what happened here. I'm going to read this little subtext for this. The FDIC's draft Genius Act rule says stablecoin users will not get passed through FDIC insurance, while insurers' reserve may count as insured corporate deposits, prompting an immediate change from the paradigm. So there's some amendments that are coming for the Genius Act because the FDIC is like, we're not doing it. So the Amendment Act is not final. So we got more, amendments for that. I think that has a lot to do. I'll tell you this. If the FDIC actually capitulated, I believe that the banks would die immediately. I think that's the only thing that the banks have right now, FDIC. Because if they capitulate, if they fall into the realm of stablecoin activity, if they fall into DeFi and start insuring our deposits, that is the last nail in the coffin for the banks. Because you're going to see a deposit flight. You're talking about a deposit flight. A lot of people are going to flood into crypto if the FDIC co-signs it. Because a lot of people just want that bagging, that insurance. But with that being said, we're going to go ahead and I told you about the exploits. We had compromised keys with the Humanity Protocol, $30 freaking million actually hack. $30 million drained. This is a BNB chain situation too as well. AVA, $8.45 billion from that exploit. Fear trading to the tune of $8.4. That's crazy. They lost $8.4 billion off of fear because of the exploit with AVA. You have Yuga Labs White Hat Rescue. I think they got $570,000 worth of NFTs back. That's pretty cool. And you have this governance takeover too as well when it comes to Balancer V1 pool. So you have these DeFi infrastructures that are just not safe. You have no FDIC insurance. DeFi has a big problem that they have to solve. So hopefully we get that solved. Before we get out, I want to get into this. Let's check out this TVL too. I forgot about this. So we're talking about stablecoin activity. As you can see, it is down almost 1%. Got to be bearish news for these protocols when you think about what JPMorgan, these 4 banks, the big juggernauts, what they're doing, what they're about to deploy. I talked about that in the show. Next year, Q1, the bridge, basically a hybrid banking system. This is what they're about to deploy. No one see that coming. That is going to shake up the stablecoin market heavily. Globally, TVL is down almost 2.5%. So the entire market in a hold is being mortally wounded at this point in time. So you got to be careful with what you're doing with your money. You must be careful with what you're doing with your money. So with that being said, I'm going to go ahead and check what's going on here. And we need to get back to the actual, we'll pull Bitcoin back up. And we're going to get to the giveaway here so we can get out of here. Still at $61,000, guys. I'm going to make sure we got everybody on the wheel because this is what we do every week. We give away SOL. 3 winners on the wheel. And all you have to do is become a member, guys, to get on this particular wheel. And check out the content. I drop content every week. Hope you guys enjoy the actual video, members. And by the way, thank all the members that have joined, the consistent members. I got some long-time members, man. So I want to thank all of you guys in the member group. Hope you enjoyed the Stellar video, the XLM video. I got another one coming. Still working on that AI. I actually had to can that AI video and do it over again. I can't get that right, you know, and I got OCD. So if something's not right, I delete and I start over. So I'm going to get that to you this week. I promise you guys. But I hope you enjoyed the Stellar content. And all you have to do is become a member. Content, you know, comment on the video. Tell me what you like about the video. And that's your ticket to get on this wheel as a member. And we give our souls. So we're about to do that. I got to do a double check on the actual content to make sure I got everybody's ticket on the wheel. And I think we're good. Let's go ahead and give it a spin. Let's see who we got here. That was a really good spin too. Let's see what we got. Lala 786. I think that's what it is. So congratulations to the first winner, La La Land 786. You are the first winner. It's been a while since I've seen you come up on the wheel. That's a good win. Let's go. We need 2 more. Wow, we're going on 1 hour and 30 minutes. So Sal 1780, haven't seen Sal in a while too. So we got 2 new winners that I haven't seen in a while. Hand clap to you, Sal. I think it's 1780. So all you have to do is send me that. So you guys know the drill. You know how you get this cash in your wallet. You winners, just you winners. So let's get 1 more. And I'm up to, you know, doing another coin. You know, I know you guys like Solana's very fast. I mean, we could switch. Just let me know. I think it's going to be Steve Hawk. I think it's going to be Steve Hawk. And that was a very close one between Olivia and Steve Hawk, but Stevie pulled it off. Steve Hawk, E5P, you pulled it off. That was very close. Olivia, I thought you were going to win that. So let's go ahead and do a recap, and we'll get out of here. La La Land 786 is going to be the first winner. Sal 780 is going to be the second winner, and Steve Hawk, you rounded it, the actual member winner giveaway out. Steve Hawk, E5P. So just hit me up. Let me know that, you know, I just need that SOL wallet, guys. And then we'll get you your winnings. And I have to tell you, hopefully you enjoy the show. Be mindful of what's going on with JPMorgan, because that may affect our portfolios, not very, very briskly, but, you know, long-term wise, you're going to see a lot of pulling out of a lot of infrastructure if the bridge actually works out for those banks, the big 4. And I think there's going to be more banks that are going to be on board. You know, there's always got to be a pilot, you know, a sector, a pilot period of a new tech. And if it goes well, I don't know, we'll see. So watch Bitcoin as well. Watch your altcoins as well. Be careful what you're DCAing as well. Have a good one. We'll see you on the next show.